Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another video here on two smartest tech stocks to buy in 2022. Out of the two is NVDA and Apple. Just did a video on Apple, but this one's got NVIDIA, so a lot of good info. But technology stocks are having a forgettable 2022 as the 28% decline in the NASDAQ 100 technology sector index shows, with investors choosing to dump high-growth, richly valued companies amid surging inflation, geopolitical instability in Europe, and also the rate hikes by the Federal Reserve. So hopefully some of that settles down and get things back to where they were, but things going down always provides a buying opportunity. That's how I look at it. Not that I give tax, legal, or trading advice, just state my opinion. But with the steep decline in technology stocks so far this year, means that investors have an opportunity to buy shares of companies that are shaping our future at cheap valuations. NVIDIA and Apple, ticker NVDA and AAPL, are such tech stocks that are worth buying following pullbacks, as they are track for a win on the lucrative trends. So I have both of these. Both of them have done really well. They've both split here. I don't know, within the last year or so, I would say. I'd have to look up the dates for sure, but I'm sure they'll be splitting again in maybe the next year or two. Who knows? We'll just have to wait and see how the stock market goes. But so some of the reasons why I'm buying these two stocks right now could help set up investors' portfolios for long-term gains. Not that I give tax, legal, or trading advice, just state my opinion here. But the first is NVIDIA, with shares down 40% in 2022. Again, another reason to look into getting shares of this one, but you'll have to figure that out on your own. But NVIDIA investors were hoping for some good news from the company's fiscal 2022 first quarter results, covering the 3 months ended on May 1st. But the graphics specialist delivered muted guidance on account of supply chain problems exacerbated by COVID-related lockdowns in China, as well as the soft demand for the gaming chips in parts of Europe. Chip Giant expects the current quarter's revenue to land at $8.1 billion at the midpoint of its guidance range. That's down from $8.2 billion in Q1 and accounts for a $500 million top line hit thanks to the loss of sales in Russia and China and this lockdowns in China. Wall Street is expecting $8.54 billion in revenue from NVIDIA this quarter, and the company would have easily cleared that mark had it not been for macro factors discussed above. So it'll come back and hit it, so no doubt in my mind. But muted guidance may not be confidence expiring for investors in the near term, but it's worth noting that NVIDIA says it's on track to deliver impressive year-over-year revenue growth of 24% despite the headwinds. What's more, its earnings are expected to grow at an annual pace of 32% for the next 5 years. Closer look at NVIDIA, key growth hotspots, tells us just the company is expected to clock such impressive growth. So, the company saw an 83% year-over-year increase in revenue from the segment last year, and a $3.75 billion accounting for 45% of the top line. Terrific growth has driven its healthy demand for NVIDIA graphics processing units by hyperscale cloud customers. NVIDIA management expects the data center momentum to continue in the long run. So, NVIDIA claims that it has a new H1 data center GPU, provides a big jump in performance over the existing A100 chip, and should prove ideal for tackling intensive artificial intelligence. I've talked about artificial intelligence on the channel here a couple times. Just another wave of the future, something to watch and something to be invested in over the long run. So, but NVIDIA recently announced that several server OEMs or original equipment manufacturers such as Foxconn, Asus, Gigabyte, and others will be manufacturing servers using Grace and such. NVDA looks set to make a solid entrance into the market that has historically been dominated by its rivals. So that's why investors are looking to buy hot tech stocks. Should take a closer look at NVIDIA, as is trading at 48 times earnings, which is lower than the 5-year average multiple of 58. So next is Apple. I just did a video on Apple and come across this article, so it's Apple Night here on the channel. But Apple stock is down 19% so far this year and is trading at 23% times earnings compared to last year's multiple of 31. It's relatively cheap valuation, helps make Apple a top stock to buy. Here are a few other things that have me excited about the stock. The arrival of 5G smartphones. I've done a couple 5G videos as well. Probably be doing more, I'm sure, in the next months to come, but as there'll be a lot more coming out about 5G. So with the company cornering a nice chunk of the fast growing market and also enjoying a robust pricing power, with some expecting sales of 5G smartphones to grow at an annual rate of 124% through 2025. So right there is a very good catalyst to buy Apple. So not that I give tax, legal, or trading advice, but I'm just stating out the points. But Apple is also reportedly looking to tap emerging tech trends for growth. Reports indicate that the company is close to launching an augmented reality, virtual reality enabled headset. Company is expected to launch its headset sometime next year, and that could open the gates for Apple to take advantage of a market that is expected to grow substantially in the long run. Apple has recorded impressive growth in its services business. Its services revenue was up 17% year over year, and second quarter of fiscal 2022, outpacing the company's overall top line growth of 9%. It also worth noting that Apple's services business had grown our gross margin of 72.6% last fiscal year or quarter, compared to an overall gross margin of 43.7%. So Apple's going to keep growing. It's just a growth stock, and before they went down, I was up on one account 200% on Apple alone. So that was back when it was in the $178 range, but I think I'm still about 100% up on Apple, so it just kind of sits there and does its thing and splits and get a small dividend, and so it's all good. So it's definitely a long-term hold, but you can list in the comments which is better, or if you have both of them, and you can list your cost basis as well. I have both of them. But again, NVIDIA, NVDA, and Apple AAPL. And if there's any other stocks out there you want me to make a video on, you can leave that in the comments as well. And again, happy Memorial Day to everybody, and thank you for watching. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.